Stablecoins are digital money that stays steady even when Bitcoin swings wildly. What makes them so stable, and how might they change your everyday life? Let's find out. In this video, we'll go step by step. You'll learn what stablecoins are, how they compare to Bitcoin, why they exist, their current status, their impact on economies and your life, and key takeaways. A stablecoin is a type of digital money designed to keep a steady value. It's usually linked to the US dollar and supported by real-world reserves or algorithms. Unlike Bitcoin, stablecoins are meant for everyday transactions without big price swings. Let's make it simple. Stablecoins are for daily use, like paying online or sending money. Bitcoin is more like digital gold, used for long-term holding. Stablecoins have low volatility because they're pegged to assets. Bitcoin's price moves a lot. Stablecoins are backed by real reserves. Bitcoin is not backed by anything. Lastly, stablecoins are usually faster and cheaper to use than Bitcoin. Bitcoin's price swings made it unreliable for everyday use. Stablecoins fix this problem by providing a steady value so people can use them for regular payments. They also help connect blockchain technology to traditional finance, making digital payments easier for everyone. Let's look at where stablecoins stand today. The first image shows us the massive market cap, over $250 billion. Next, 99% of stablecoins are tied to the US dollar, showing strong demand for dollar-pegged options. The market has grown 125 times since 2019, starting from about $2 billion and climbing to $250 billion today. We also see how the market cap has grown steadily year by year, shown in the chart. Lastly, we see that Tether and USDC are the main leaders in this space. But there are other stablecoins coming up too. Before we look at each point, let's understand what the Genius Act is. The Genius Act is a new US law passed in 2025 to make stablecoins safer and more reliable. It sets strong rules to protect users and build trust in the system. Now, let's go through the points on this slide. First, only regulated issuers are allowed. This means only approved and trusted companies can issue stablecoins. Second, they must hold one-to-one reserves. For every dollar of stablecoin, there must be one real dollar saved to back it up. This makes sure you can always exchange your coin for real money. Third, public audits are required. Companies must show proof regularly that they really have the money they claim. Finally, these rules will fully roll out by 2027. This gives time to prepare and make the system stronger. Overall, the Genius Act is a big step to make stablecoins safer for everyone. In the short term, stablecoins make payments faster and cheaper for businesses and consumers. They also increase demand for US Treasury bonds, which can help lower government borrowing costs. However, if too many people cash out at once, there could be financial risks. Let's talk about the possible long-term effects of stablecoins in the US. First, they could lead to stronger dollar dominance worldwide. As more people use stablecoins pegged to the dollar, it strengthens the dollar's global power. Second, there will be pressure on traditional banks. People might move money from bank accounts into stablecoins, making it harder for banks to keep deposits. Third, it will be harder for the Federal Reserve to manage the economy. If people hold more money in stablecoins, it may affect interest rates and how the Fed controls inflation. Lastly, there are new financial risks. If trust is lost and people rush to cash out, it could create sudden problems in the financial system. Overall, while stablecoins can bring new opportunities, they also bring big challenges that need to be carefully managed. Let's look at what stablecoins mean for the world. First, they can lower remittance costs. This means people can send money to their families in other countries faster and cheaper. Second, they give people access to stable money. In countries where local money loses value fast, stablecoins help people keep their savings safe. Last, they can hurt local currencies. If many people start using stablecoins instead of local money, it can weaken the local economy. Overall, stablecoins can help many people around the world, but they also create new challenges for each country. Let's talk about how stablecoins affect Bitcoin. First, they help trading and liquidity. Stablecoins make it easier and faster to trade Bitcoin on exchanges, because people can move in and out of trades without using regular dollars. Second, they let Bitcoin stay as digital gold. Since stablecoins can be used for daily payments, Bitcoin can focus on being a long-term investment or store of value. Finally, there is a rise in illicit use for stablecoins. Some people now prefer stablecoins for illegal activities because they are faster and more stable, which is a big concern for regulators. Overall, stablecoins and Bitcoin support each other in some ways, but stablecoins also create new risks. For everyday people, stablecoins can make payments easier and help protect against inflation, even without a bank account. But there are risks too, like scams, less privacy since transactions are on blockchain, and possible loss of value if trust is lost. It's smart to choose regulated coins, follow new rules like the Genius Act, and keep learning about this fast-changing space. Stablecoins are changing the future of money. Stablecoins bring more stability to crypto, but they still have risks. The market is growing fast, so strong regulation is needed. Staying informed helps you take advantage of benefits while staying safe. If you found this video helpful, please like, subscribe, and share your thoughts in the comments below. Thanks for watching.